Hey everyone, it's Prophet Kevin. Okay, no, I'm kidding. The only reason I'm saying that is because actually you all, the audience, has mentioned this. But you all have mentioned that in this video right here, in the last 5 minutes, apparently I basically nailed it. I said that I was investing heavily into the market for 2 reasons last week. One, I thought the worst was last week, and I published this on March 4th. I talked about how on March 4th, I think maybe we're gonna have another Red Friday. Maybe the market will open up really bloody, but I think it'll start recovering. Then we're going to see the effects of the weekend effect kick in, where people start taking account of what happened and go, oh man, things are cheap. Institutional investors are going to come over. And then the stimulus is going to pass. And then maybe the Fed will loosen, which the Fed hasn't loosened yet, but stimulus passed. The weekend effect took place. And what happened this week? Well, not only did we nail it about Friday, but we were right about the weekend effects coming into play and the stimulus coming into play. And what do we have? Tuesday, Wednesday, and Thursday were all substantially up. Now, great video. I mean, watch it if you haven't yet, because you will see during the bloodiest time what I was saying, why I was buying. And I think it's a good psychological lesson to see okay, this is what I was thinking of when it was bad. So what am I thinking of now? And this is not to say that what I'm about to say is right, because I don't know. I think I got lucky there. I was just putting all of my reading and all the data and my belief about how the psychology of money works together, and that was the conclusion I came up with last week. It's kind of the same reason why when we were in March of 2020, I refinanced all my properties and took all that money and plowed it into the stock market. Peak fear. It's also why right before this crash, I sold off $1.5 million worth of stocks to lower margin. I do these things because of what I see and hear in the economy. And this is why hopefully you appreciate the channel and you subscribe. So what do I think going forward? Obviously, the market is recovering very strongly right now. Isn't it possible that the market is going to crash again? Here's my take. This week, we also not only did the market sort of, and I know not everybody's supportive of this, but yes, the market sort of got blessed with the stimulus package, but the market also got blessed with better unemployment data. We got lower inflation data than expected, which is something that I've talked about a million times on this channel about how I think long run inflation is just not going to be as high as people think it's going to be. I think the market is overvaluing how bad inflation is going to be. And we got the European Central Bank saying they're just going to buy a bunch more bonds to try to do whatever they can to control yields, to bring yields down. So we got a lot of really good catalysts. Those catalysts, we got the catalysts we were expecting, like the stimulus and the weekend catalyst. We got those catalysts plus some. Unemployment, CPI, the ECB, those are good. Okay, but so this is good. You know, the market's obviously going up. This is wonderful. What does this mean going forward? We're going to see another crash. So my take is that over the next 3 months, we are going to get really nasty inflation data, but it's going to be what I call Fugazi inflation data. That is because we're going to be comparing March 2020 to March 2021 in April. It's a year late when they do, it's a month late when they do the measurement. We are going to see very high inflation for the readings for March, April, and May, which come out April, May, June. So next month in April, we're going to get March's CPI data. We're going to go, oh, dang, what? 2.4% inflation year over year? And then the next month thereafter in May, we're going to look at what? April data? 3.4% inflation year over year? Here it is. We knew it. We knew there was inflation. The data is finally catching up. The problem is this is going to be temporary. This is not going to be, as Fed Chair Jerome Powell says, persistent inflation. And I don't want to have, the point of this isn't to have a debate over inflation. This video is not an inflation video. But when you know that, and you already know my thesis on, look, the whole bond yield thing, how bond yield's going up and stocks going down, I get it. That exists, but I think that is going to soften. It's already been softening, that relationship. But what instead could be very interesting is when we start getting some very real, ugly-looking CPI data, inflation data, that we know is temporary, it is very possible that we're going to see this same kind of crash, maybe not as severe, but a similar crash, or at least the volatility of this crash, that we have seen between February 19th and approximately, let's see, today is the 11th, so to about the 8th, the 8th, 9th is when the market really started recovering again. It is possible that we're going to see that same period of pain recur. Maybe not at the same level of pain, the same extremeness, but I think when inflation data comes in high, there could be this similar panic and then reconciliation. Panic and reconciliation. And so the point of that is to say, I am motivated, especially with this last little oopsie doopsies that happened here over the last few weeks, I'm motivated to make sure I keep my margin under 20% as soon as possible. Even if that means me selling a few positions I have less conviction in, I would rather roll my lower conviction stocks and concentrate them into the higher conviction stocks, which is something I did before the crash. But now as prices are going up again, I'm going to consider doing that again. I like selling companies when they're up. Not usually, because I just don't like selling in general, but I'm saying when I go to sell, I like selling when they're up. Obviously, who doesn't? But anyway, if we go through the next, 3 months of some of this, inflation volatility, and the market just doesn't understand, and the market thinks no big inflation is coming, we're going to see these drops again. Not to this magnitude, but you want to be prepared for that. So in my opinion, I would not be doing any short-term options right now. I can't predict when that pain is going to come back. I would be buying the dips though, just like we did last week. I bought a ton of money money worth of stocks last week, and I'm really grateful I did because that ended up being the bottom when I just loaded the boat. Again, luck, or maybe it's a combination of everything that we're seeing in the market by tracking the market as much as we are. But I find it very interesting that last Thursday, I think bond investors or institutional investors, in that video, watch that video, in that video I say I think institutional investors are going to U-turn and they're going to go, wow, there's some really big good deals here on tech. We should rotate back out of recovery stocks and go back into tech. Folks, look at what the Bloomberg ran this morning. It's literally like they're watching my channel. Wall Street is rethinking the treasury threat to big tech stocks. It's literally what we called last week. And again, I'm not saying, here's the prophet who can tell the future. I can't. I do believe that the next decade is going to be a stock market you want to be a part of. You want to be a part of this stock market over this next decade. I don't know when we're going to see this kind of volatility again, but I don't think we're done with it. This inflation fear, people aren't all of a sudden convinced that inflation is not coming. So we might see the bond market fluctuate up, down a little bit, and we might see stocks just continue to go up for a while. It is possible we go back to higher highs that we had before. But I do think at least over these next 3 months, whether it happens or not, we want to be very cautious and prepared for another freak out inflation style dip. And that CPI data coming out over like this last CPI data set, that was like a bailout. That was great. Thank you. I think that's correct long-term for the long-term trend. But over the next, 3 months, we're going to get much worse and uglier news. Now, it depends what the market looks at. If the market says, wow, year-over-year inflation data is so bad, this is horrible, market tanks. If the market values that. If the market goes, no, Kevin's right. The year-over-year data doesn't matter because we're measuring into the pit of the pandemic. We shouldn't do that. What's the month-over-month inflation data? And if we're not seeing inflation data month-over-month, which actually came in lower than expected from January to February, which was another bit of good news, if that continues from Feb to March, March to April, April to May, and then we get that measure in June, that final measure in June where it really matters, these next 3 months being the ones that matter because that's when the pit was from last year, then we might not actually see another big dip like we just had. So my bottom line expectations and my strategy going forward, and I don't want to sound like a broken record, but it's so freaking important, especially the pain everybody went through in the last 2 weeks. Don't kid yourself. Like, that is real pain. You are valid to feel those emotions. I feel those emotions too. It's just what you do with those emotions that makes you a different investor. Do you sell? And then that's it, I'm going to reset, I'm going to start over? Or do you double down? And that's up to you. Obviously, you know what my strategy is. So what's my strategy now going forward? Well, stocks are going up again. I'm going to take this as an opportunity, especially as stocks go up. I'm going to reevaluate some of my positions. I'm going to look at some of my positions and I go, okay, what do I have that I want to dump? And that doesn't mean that I don't love the company. It just means I don't love the company enough to let that company be a reason that I'm potentially higher on margin than I want to be. It's just not worth it. I'd rather keep my more concentrated positions, and I'll sell as the market's going up. I'll sell a few things. So over the next few weeks, if you're in the Stocks and Psychology of Money group, which you can get in with the expiring coupon code, which expires in 4 days, you get 38% off, access to the private live streams and all my alerts. Then you will see those sell alerts when they come up. And there have already been sell alerts, or at least a sell alert, which I'll talk about more at a different time. But anyway, the goal is get under 20% margin as soon as possible. Now you have to be careful. Personally, look, if I took all my cash right now and paid down my margin, I'd be at about 30% margin. If I just sit around and do nothing, it's quite possible the market could appreciate to a point, prices could go up to a point where I'm at 20% margin and I literally didn't have to do anything. Like the market basically just bailed me out over time, right? I don't want to rely on that. I want to look at a snapshot of my portfolio today, and my goal is to pay down a good 10% of margin myself. And if the prices go up and that means I'm at 10% margin in the future, fine. What's margin going to provide me in the next crash, the next time we get this kind of pain and volatility and all the crazy commentary that we get in the YouTube comment section that's like, nope, this is the end. Tesla's going to zero. It's over. We're going to see Bitcoin go to zero. You know, all these crazy comments. Like, that time will come again. I lived those comments because of the March crisis, right? And it's, look, this is not to single out folks, but this is a serious thing. This is so common. You know, oh, people are out of money and didn't realize it was a 7-layer dip. This is a very common phrase that people say when it's like, well, it's just going to keep dipping. But what do I say on this channel? Sure, it might feel like it's never going to end. But when it ends fast. Kind of like this. Oh, it's going to get worse. I mean, we see this. This is all the time. We bought the dip and it kept dipping. Well, I guess we got lucky because it turned around pretty dang fast. So let's see here. If you guys think this dip is so far is scary, I'd say hold your horses and extra cash because the fear and greed index haven't even reached extreme levels yet. Well, I also don't think the fear indices are going to hit extreme levels or would have last week. Like, my reaction to the comments is like, well, why? This is a very important a question for you. Why did the market crash on February 19th? Think about that. Why did the market crash? Why did all of a sudden we have this crisis for 2 weeks? Okay, the best argument, if I was going to make the argument, the best argument would probably be valuations are high, bond yields skyrocketed. Okay, it's a fair argument. So we had a correction because of that. Now let me give you this. Why did we crash in March of 2020? Because the world was in panic mode, buying out toilet paper, thinking we were going to shut down for 60 to 90 days permanently. Everything was going to be shut down. I mean lockdown. With martial law we were talking about. We were talking about martial law coming to make sure people stay in their homes. And we've got all these pictures of hazmat suits and gas masks. People are going to Congress with gas masks on. You got Bill Ackman on TV going, shut everything down for 30 days. This is the worst crisis ever. And everything is like, everyone is like, ah! You know? That's fear. This last bullcrap correction was a joke. It was fugazi of a crash, in my opinion. I mean, okay, bond yields shot up at a fast rate. Really? That's the best you got to create a market crash? That is what caused this correction in tech, right? But to me, it just created a big fat buying opportunity. Now, it was a warning. It was like a nice little red flag, like, just be careful. Don't you have too much margin. Now, fortunately, I was not over leveraged. I went in like 29, 30%. It's higher than I wanted to be. I wanted to be at 20%. Good thing I sold on Feb 16th and reduced my margin. Otherwise, I would have been even more nervous. But, and who knows? I mean, the market could crash tomorrow after I make this video. What do I know? I'm not trying to predict tomorrow. I'm just saying, be prepared for that volatility. I don't think we're going to see a dip as big as we just did. And looking back, and I believed it then too. Why is it not as bad as what we saw last year? A lot of people are like, oh, it's a year to the date. See, this is the crash. This is it. We're gonna have the same thing again. For you to believe that, you have to tell me that the fear that we saw last March is the same fear we feel right now. Nobody feels that fear. Nobody feels that same fear. My thoughts, if you like my perspectives, you know what to do. Check out the program's link down below. Thank you so much for your support. I appreciate you, and we'll see you in the next video.